got the stop fair value now. I'm not seeing any opportunities to play here. So when I see a buyer coming in, now that I know that there is a Charlie D buyer here, I now have a level to play against, right? So when I see this selling coming in here, and there's a lot of selling on a very small candle and a lot of selling on a very small candle, this looks fair. And now looking at this, I now know there's a buyer in the background because I can see them. So I should be able to buy when it drops. And that's what I did. I bought when it dropped, picked up a little 3 on Ninja Trader, and we've just managed to swing a $1,200, $1,300 winner off the bottom prices. And that's not that difficult, is it? So you can see what I was expecting. Once the 40 level went offered, you're expecting a lot of sell pressure. Why were we expecting sell pressure at 40? Well, Howard told us. Because there's a call wall at 40. So we know that there's a fair amount of liquidity there. So we know that there's going to be some unwinding of positions and all various other things. We'd already seen the break of structure when we went south out of this area here. See the fast candle here? So we'd already broken that structure. And then we knew, therefore, we were probably going to trade somewhere else. Now, I first of all thought it was going to be 30, to be honest, because that would seem to line up with my ideas that we were going to trade 30 here. That never happened. So we came across the spread and bought it when we started to see the opportunity to take the deal. And that made an easy decision just to play into this. You don't have to make fast decisions, guys. You have to execute quickly, but your decision can be careful. It can be considered. At that stage there, we've seen a slowdown in the short-term value as well, haven't we? See how the short-term value slowed down? What's the most important value, Howard? Short-term or long-term? No, the most important value when you're trading is the short-term. So when I see short-term value dropping like this, and it's dropping quite hard, I cannot buy it. I cannot buy it unless I'm at a macro level. Am I at a macro level? No, because a macro level would obviously be perhaps at 900 or day session lows, right? So this would be a buy trade, even if the short-term value was dropping, it would be a buy trade down here, right? Nowhere near that price, so we've got to make a different decision. So the short term is aggressively selling here. Would you agree with this? And then it starts to dry up here on this candle. And then it's very flat here on this candle. But on this candle, what direction is the short-term value going in? The short-term value is going in the direction of the long-term value. Is this not the best buy trade you've ever seen? I'm right, it's the best buy trade you've ever seen. It's the perfect buy trade, right? It is absolutely the perfect buy trade. So you wonder why I'm now a buyer of the S&P, the NASDAQ at the best possible price? It's just because I was watching these elements building to a point where it became dead obvious that that was going to be where the trade was at here. Right? We knew what the trade was now. We can see the value is now bid on this candle. And now all I've got to do is make sure I execute. Now I've got a big range that I could execute into. I could have traded anywhere in that area there, and I would still have easily have made a lot of money. Short-term value in the direction of long-term value at a discount price is one of the most powerful trades you will ever be able to find. Short-term value into long-term value is incredibly valuable if you can get a discount to those types of deals. Well, that's a perfect example of a perfect trade right there. That is a perfect example. Now, I know that there's going to be an offer here. We touched this in classroom earlier on today about why there would be an offer there and how you would know that there was going to be an offer there. But again, we'll obviously cover it again later on. I think, did Reeve say that he fancied that as a classroom later?
Yes, he did.
And this is just statistics, guys. This isn't trading. This is statistics. And that's, I suppose, what's important about this as a statistic, because I now know you know, the basic structure of this has gone bullish neutral, right? I know from this chart here, I can now tell that the structure has gone kind of bullish neutral now. So based on that, I can now try and draw what I did over here, which is obviously draw these parallels from the bottom edge and the top edge. And obviously I'm now looking at that saying, well, that is basically now what I'm thinking about the underlying structure of this, which means that if I got a pullback with this value now, I could be looking to buy into the 50 line. So I could now be thinking about the possibility in the right environment that perhaps a little sweep down in through this liquidity here might now give me an opportunity to buy on a pullback if everything stays in place. Big if. Because things change and we've got to be flexible enough to change with them and adapt as the narrative the underlying narrative develops its own story. And that's where we start making the big breakthroughs in terms of trading. Who joined in for a quick buy, guys? We know that that was going to be a buy trade, so we took it. That was a good sell-off on oil, wasn't it? So if anybody was on board, you probably paid 30 for it, so that was nice. You might have paid the break at 25, which is obviously our dealer's key. We've sold this 25 a few times today, haven't we? We actually highlighted this as one of our structure levels because we obviously did a class on this particular part of that structure. And you may well have been able to expect to get a bit of cash out of this trade, and I'm sure a few of you did. If you were following my classroom from this morning, you probably can recognize the sellable opportunity. Now, we can't sell this for obvious reasons, but we can sell this for obvious reasons as well, can't we? First of all, when I'm retesting the high price, is the green right line rising? Is the crack spread skew rising? Yes or no? Yes. So can I sell oil? Well, that's my basic idea. That's what I'm now looking for. I should be able to take a trade that looks a little bit like this. So I can look to sell oil. What am I now needing to see? I need to see the blue line diverging against the price as well. And I need to see the blue line premiumed against the green line. Is the blue line premiumed against the green line in this area here? It hasn't been really premiumed against the green line pretty much anywhere else, really, but it's very premiumed against the green line here, which means the only thing that's moving now is oil, right? That's the point of this as a skew. The only thing that's moving is oil. So why is oil moving and nothing else is moving? Well, perhaps it's called manipulation, right? So maybe they're trying to move the oil price up to get liquidity. So how do we see liquidity? Well, we would obviously be able to expect to see liquidity if we broke 25, because that's a dealer's key. Yeah. 25 is a dealer's key. And if we never saw the increase in volume, we'd probably be expecting to have to go bid above the day session highs up here. So when we broke 25, did we get volume? Yes or no? We got a good increase in volume right there. So now I've got my trade, haven't I? I can now lean against that volume on a rejection of the 25. So whether you sell it on the way up or whether you wait for it to turn back down below the 25, that's your choice. If you sold 24s or 23s, I get it. I understand that. That's a perfectly valid play, guys. If you sold on the fade at 30s, that's a perfectly valid play. I get it. That's perfectly good. But what I'm saying is you've got to have sold one of them, right? There is no choice. If you're going to be an oil trader, you've got to sell one of them. So there's no getting away from the fact that you need to currently be short and absolutely annihilating that short sell at 30, 25s, 24s, or 23s. That's the trade of the day so far. So we don't know what the big trade of the day is going to be. It could be, we're chopping in and out of these trades. We don't know it's going to break, but obviously we've got a good lift in terms of the crack spread. It looks strong here for that sell trade to keep working for us, doesn't it? So it looks like this could be the trade of the day. Now, obviously, we're starting to see this discount coming into this very low price. So obviously, we've got to now be very careful that if this starts to turn back off at lower prices, and we need to know where the high of the crack spread is. And at the moment, the high of the crack spread is here, right? Not there. The high of the crack spread is basically that low price area there. But it is really pretty much touching the same prices. I'd rather see them kind of starting to drop down into this area. And then we can start looking for the banker reversal. Now we can zoom in to find the banker reversal, and it kind of started to set up here, but the blue line is making a lower low. What can I not do on oil when the blue line is making a lower low? I can't look to buy a fresh low, can I? So I need the blue line not to be making a lower low. I need to spike it down to get a divergence against the green, but I don't want to see it making a lower low. So I want to be now watching this for opportunities to look for a buy reversal into this discount price territory. And that might take us just a little bit further on this play. Obviously, we've got a lot of stories to now take profits from. We've got a lot of stories to now take profits from, and that was a good decision not to buy it because you've just been scratched. Now, we've got a lot of macro in this. We've got a lot of macro value in this trade at the moment. That's pretty obvious. And, yeah, I think we could still take it possibly even down to about 50. So that means that we're going to make about $750 on each of our oil traders here. So well done, guys. I like it. Assuming you're in it. And I am definitely assuming you're in this one. And you've made a lot of monies. Why am I assuming you're in this trade, guys? Why am I making a huge assumption that you're in this trade? Because it's so bloody good? What other reason? Why else did you join that trade? Why else did you join that play? There's something very obvious as to why you joined that play. Yeah, it's the cash open. What did we always tell you, Kuba, to do before the cash open? Tell you to get in on the deal, right? You want to try and get position perfect for the cash open because if you miss the cash open, you might never do a trade, right? You might never do a bit of business. You'll be sitting there on your fat arse watching everybody else making the big monies. So we want to be in it for 2 o'clock. Otherwise, you're just a hider. You're one of these people that likes to think about trading, but hates to actually do it because it's too scary. It's a big bad world, and they don't want to take part in that big bad world. Well, that's up to you guys, isn't it? If you're that bad at trading, maybe you should go and do something else. A 30, absolutely. A big 30. So we were right about the exit, weren't we? Very right about the exit. Very, very nice. No value on the buy, unfortunately, for the reversal, but obviously big volumes to get your price out. And that might well be us finished for the day, guys. That might be our oil done and dusted for the day here. And we've been in the market for 30 minutes. Crazy, isn't it? In the market for 30 minutes. Now, we've got a lot of value to buy into this oil. So obviously, if this starts falling and this falls, I can now buy oil, correct? I can now buy oil. If this falls and the price falls to the bottom edges, I can now look to buy oil on a reversal. So that's what I'm kind of now starting to think about is this 68.50s area. And I'm now going to be thinking about that as a possible play in there if it sets up. Otherwise, finish with oil, right? It's always just the bad traders that come in on oil at this point. Because there's nothing left. The value's gone out of the move, hasn't it? So, you know, it's just the dross at this point in terms of what we've got available. So it's a lot of what we call short covering rallies that take place. But I'm not going to be a seller on the short covering rally for obvious reasons. Because the value is starting to drop out. If the green line was still at the top edge, I'd be looking to sell the short covering rally. Crazy how obvious it is. Crazy how easy it is. We covered this in Classroom yesterday, so I don't think anybody's going to get this by surprise. Cash open, of course. Lots of dealer sellers here. That's why we drew this angle for you. Well, that worked out beautifully, didn't it? So we told you this is the angle. And look at what happens along this line. Do you see what happened along that line there? Dealer selling, dealer selling, dealer selling, dealer selling. What was the short-term value doing on that dealer sell there? Short-term value is collapsing. What could you have done? Take your shot because you're going to be targeting 920. If you can get in at the break of 940 and you know that the buy might not appear until 920 here, now that's worth 20 pips, right? That's worth 20 points. That's a $400 sell there. And obviously, coming into the cash open, you may well have been able to fully take advantage of the fact that that's what you now know to be the next buy price anyway is 920. So if you know that the buy price is going to be 920, that might well have been your play right there. And my goodness, you absolutely knocked one out the park there. That is beautiful.